let's talk about DeFi. So can you, for the listeners, explain what actually DeFi is?
Sure. So DeFi stands for decentralized finance, and effectively, it is a catch-all term for apps that are trying to disintermediate the existing financial services industry, specific products within that, like let's just say lending, right? So in the past, uh, you would go to a bank, you would make deposits. The bank, let's just say you're a depositor, you might get paid less than 1% on that deposit. Meanwhile, the bank is then taking that money, loaning it out to a borrower, and then earning interest on that lending rate that they're providing to the borrower. So the bank might lend out the money at 10%, they might pay out the money at 1%, and that 9% spread is captured by the bank. DeFi, because it's decentralized, eliminates the middleman effectively by using a smart contract so that the lender and the borrower can connect directly to each other and have a better lending rate and supply rate. So that's just one example of decentralized finance, of DeFi, but that's sort of the most popular right now. And it's also come about within the macroeconomic backdrop of negative interest rate policy, zero interest rate or low interest rate policy by central banks, which affects everyone who's interacting with the financial industry. So it's really kind of this very interesting, still a bit nascent. I mean, $10 billion to the global financial industry is basically nothing, but at least it's kind of like that entry point where it's been a very interesting case study. And we've learned a lot of things. It hasn't been all sunshine and roses. There's been some mistakes and errors made in the DeFi space. But the industry, I would say, is maturing very, very quickly. And yeah, some clear models that are effective are starting to emerge.